Breaking news, we have stablecoin regulation. You need to pay attention because this is important. I'm WendyO. I talk everything crypto every single day. To get more, make sure you subscribe with all alerts set, smash a like, watch until the end, and drop me a comment with your thoughts about the Genius Act stablecoin that was just passed today. And for disclosure, I think that we will get a CBDC in the United States of America, and this is essentially ushering that CBDC in, but is kind of disguised. Yes, I know that's an unpopular opinion. I know the current administration said, no, we're not getting a CBDC, but it just makes too much sense. Anyways, the Genius Act was passed by the Senate Banking Committee today, March 13th, 2025. And essentially, it's going to provide regulatory clarity for stablecoins. It goes on to say digital assets pegged by assets like the US dollar to essentially enhance the US dollar's competitiveness in the digital economy. And when they're talking about digital economy, that can mean many different things. That can mean in the regular Web 2 world or the regular Web 3 world. Basically, we're already seeing most of America and most of the world become digital. We don't really use cash for anything. So of course, they're going to want to instill laws and regulations regarding stablecoins because they want to protect the US dollar. And they also need to catch up with other countries like China that already have a digital yuan. This bill was introduced by Senator Hagerty on February 4th, 2025, and it was just approved today. And it also kind of establishes federal licensing framework for stablecoin issuers, Circle, Tether, etc. Maybe even some of these big banks in fiat. But it really just wants to make sure customer funds are safe. The Genius Act was passed with bipartisan support, 18-6 vote. And again, David Sachs did talk about how important it was to get stablecoin laws and regulations put into place. Because again, they want to protect the US dollar and they want to stay ahead of the curve when we're talking about technology. But at the end of the day, this is just going to help usher in a CBDC. When we're talking about Bitcoin versus stablecoins, it's a lot different. When we're talking about a stablecoin transactions can be halted, they can be reversed, all kinds of different things. And that kind of aligns with the CBDC. When we're talking about Bitcoin, Bitcoin is an asset, it is a finite asset. You cannot print more stablecoins. You can print more when you print more fiat dollars. But Bitcoin is an asset that you can custody yourself, that you can hold on to. Once that transaction is sent, it is there forever on the blockchain. The transactions are immutable. Stable coins are not. So again, when we take a look at something like RULSD that runs on XRPL and Ethereum, that it allows for clawbacks. It basically means if somebody does something naughty, they can reverse a transaction, they can claw that money back. And that was a big selling point when we're talking about Bitcoin and a lot of other crypto assets, primarily for merchants, is there's a lot of fraud that occurs. So even though this is pushing crypto forward, it is kind of a step in the right direction for mass adoption, especially because banks are now allowed to deal with crypto. It's still a negative thing in my personal opinion, long term, because a lot of these bills and acts and whatnot are very big and thick, and we don't know exactly what's going to be put in them moving forward. So it's important to do your due diligence and to stay the course and pay attention to what's happening. Either way, this is breaking news. It is a very, very important. And thank you guys so much for watching. Bye-bye.